After those weaker sessions we saw on Tuesday and yesterday, there appears to have been another shift in sentiment, and we're up quite nicely today. What's behind this move, Yolanda?
I think it's just in terms of global sentiment. You saw the Bloomberg Professional Global Confidence Index numbers came out yesterday above 58 from its lows of 39 previously. There are expectations for GDP, US GDP to come out stronger. We're looking at 2% versus your 1.2, and really, positively off the Federal Reserve's comments that the US, economy is stabilizing, and of course, the rates were left unchanged yesterday.
So do you think that investors are really just looking for any reason to push equity prices higher at this stage?
Yes, the good unemployment non-farm payrolls numbers came out last week. We're looking at, if you look at the S&P 500, 70-odd% of companies beat their earnings forecasts. Really, investors taking any good and positive information, to really kind of carry us forward.
Of course, our South African companies have also started reporting. We're right in the middle of reporting season, and not really beating expectations like those American companies did. So do you think we're behind the cycle with our corporate earnings as well at this stage?
Well, we have our currently we have our lag in terms of the recession. We started the recession late, and I think we are going to come out of the recession later than our global counterparts. We also didn't get any of the the physical stimulus that global economies have received. So our economy is going to naturally kind of come out of the recession at a later date.
And of course, we have seen some economic data this week that shows that we are still really in a bad position at the moment. We had those manufacturing production numbers out on Tuesday with a 17.1% contraction for the year to June. Retail sales down 6.7% in June. And of course, we had those mining production numbers out just a short while ago, showing a 7.4% contraction, and even worse for the gold sector, down 12.2%. So do you think in light of this data that we're seeing, it could perhaps sway the Reserve Bank to cut interest rates again this year?
I think we could see, or Nedbank's view is that we'll see 100 points by the end of the year. But with cuts coming, through late in the year, we're expecting no change, this afternoon. And really just looking, the Reserve Bank's really, so I was really looking, for inflation to come within that target of between 3 and 6%. So until we really see that, I don't think, we're going to get cuts, soon, but definitely 100 points by the end of the year.
Just looking at those mining production figures, do you think this is really just a reflection of the state that the industry is in at the moment?
It really is. If you look at, the age of the mines, you look at the high costs, with the Eskom tariff coming through, margins are being squeezed. And we're also seeing a lot of the mines looking at safety requirements. So they're not mining the higher grade, more dangerous gold. And all those factors are really contributing to the output.
And of course, we have seen the rand trading below 8 rand for quite a lot of June and July, and of course back below 8 rand again today, and that can't be good news for gold miners, can it?
No, not in the long term. A weaker rand is definitely more beneficial for our miners.
Well, we had some results out this morning from Standard Bank, first half results, pretty much in line with what the market expected, because it did put out that trading update after Liberty's results last month. 27% dip in headline earnings per share. What was your view of those results, Yolanda?
They were definitely in line with consensus in terms of Nedbank's numbers. What was quite surprising out of the numbers was NII performed really well. Obviously retail impairments, as you saw with our other retail banks, weighing down the numbers. Liberty's numbers last came out at 647 million. That really contributes to 5% of Standard Bank's number. We're still quite positive on Standard Bank. It's definitely our pick of the banks. We've got a buy recommendation with a 1-year target of 114. So we're quite happy with that, and we can see the market's quite happy with the results as well.
Of course, what's really important in market conditions like these is dividends, and of course, Standard Bank paying a 141-cent interim dividend, maintaining the ratio at 2.5%. What's your view on that?
Well, I think it's important. It shows that in your next quarter, where even though the banks have come out to say that that the next quarter is going to be tough, but with the effect of interest rates coming off, and I think long term that is very positive for the banks, and really that should really encourage confidence with investors, those buyers of banks.
Well, another little snippet of news out this morning, that was Anglo selling its Tongaat stake, and of course it's announced yesterday that it was going on this accelerated book building exercise to sell that stake. 1 day later, it's already offloaded that 49.5% stake in Tongaat Hewlett. And a good move for Anglo, and what would you do as a Tongaat shareholder?
Well, in terms of Tongaat, I mean, this has come at a really good time for Tongaat, that have had favorable news with the Zimbabwe, consolidation, and as well as, sugar prices hitting, 10-year highs. I think it's quite positive for the share price. We could see it, run up as much as, 95 Rand in the next year. So I think it's really quite positive. I would personally buy some Tonga stock.
And of course, good news for Anglo as well, because it needs that capital, doesn't it?
Yes, and it's really in line with their core or their mandate to get rid of non-core business assets. I mean, it's great for capital preservation. Now, really, it's going to keep them lean and trim. In terms of defending itself against any ex-strata merger. So I think it's quite positive for Anglo, and one can see that all the shares were taken up quite quickly. I think it's quite positive for them.